डॉक्टर बाबासाहेब आंबेडकर ओपन युनिव्हर्सिटी.
Hello my dear student, welcome to Dr. Babasaheb Ambedkar Open University Ahmedabad in Chaitanya studio of Dr. Babasaheb Ambedkar Open University Ahmedabad in the video series lecture series of the course called BBA program. In that management accounting subject, block number 4, unit number 3. Let's start our session of the management accounting of that block number 4, unit number 3 with respect to it. It is nothing but your marginal costing, chapter called marginal costing. Now the first question in our mind, that what are the learning objective of this particular chapter. So first learning objective is that definition and the meaning of marginal costing, then characteristic of marginal costing, advantages of marginal costing, limitations of marginal costing, and certain terms relating to the marginal costing. Let us begin our journey with the introduction part of the marginal costing. At any change in the total cost of production by an increase or a decrease of a 1 unit of a product termed as a marginal cost. In economics, in the cost accountant, the same concept is put in the another way. A system of determining the cost of production by excluding fixed from expenses from the total cost is known as the marginal cost. The total cost of an article, or we can say the production or the product, is made by the variable expenses which are increased per unit of output, and it's a share of a fixed, that is a constant expense, or we can say the constant cost, or we can say the fixed cost. Under the marginal costing, the total cost is classified into the fixed and variable expenses, and only variable expenses are recorded, whereas fixed expenses are excluded and they are changed against the fundraising out of the excess of selling price over the variable expenses. The marginal costing is not a system of costing like job costing, process costing, etc., but it is the only a special technique of presenting the cost whereby the possible to find out the effect of changes in a volume of output on the profitability of the firm. Now let us move to the definition point. The Chartered Institute of Management Accountant, in short form we can say that the CIMA, has given the following definitions. The first, marginal cost. Before we move to the marginal costing, we have to understand what is marginal cost. Marginal cost means that amount at any given volume of output by which the aggregate costs are changed if the volume of output is increased or decreased by 1 unit. In practice, this is measured by the total variable cost attributable to 1 unit. That means we can say that this is the total variable cost which is attributable to the one particular unit, or we can say the production unit. In that practice, after defining the marginal cost, let us examine the what is marginal costing. The ascertainment of marginal cost and of the effect on the profit of a change in a volume, or we can say the types of output by the differentiating between the fixed cost and the variable cost. So this is called, my dear friend, this is called a marginal costing. Firstly, we have to ascertain what is marginal cost, then after we move to the marginal costing. A more recent definition given by the institute is as follows, that the marginal costing is the accounting system in which variable costs are charged to the cost unit and the fixed cost of the periods are written off in full against the aggregate contribution. It is the special value is in the decision making. And that's why we can say that, my dear friends, sales minus variable cost is equal to nothing but your contribution. And this contribution is ultimate use in the marginal costing. Now, the first question in our mind that, sir, why marginal costing is required? So there are few uses that the specific managerial use that the marginal costing is required. In this first use, that you have to ascertain the cost, then control the cost, then for the decision making. So these three aspects are the main function, or we can say the main aspect to require the marginal costing. A few of a decision making problem that can be the illuminated by the managerial, or we can say the marginal costing, that are profit planning, pricing of product, make or a purchase decision, or we can say the make or buy decisions. In that, we have to, according to these definitions, which we have to define the different characteristics over there. So first characteristics of the marginal costing is the cost is ascertained on the basis of a variable cost only. Yes, my dear friend, the marginal costing is ultimately relating to the only and only which factor, that is only and only variable cost. The cost is presented in such a manner that it help the management in taking the important decision. So that's why, my dear friend, these three uses of that marginal costing, that cost control, cost ascertainment, and the decision making. So this is the second characteristic of the marginal costing, that it helps to making a perfect decision. Then the third characteristic is the stock is finished goods and work in progress are valued on the basis of marginal cost only. For ascertainment of the profit, a special type of profit and loss account is prepared, which is known as the marginal profit and loss account. So here the track is different. Firstly, we assume that what is that marginal cost. After that, what is the marginal costing? An institute suddenly changes, and the change makes the trend accordingly. So in that, they define the marginal costing is an accounting system which attributable to the fixed and variable cost accordingly. Then after, which is the more reliable in nature, and for that only we ascertainment and we make the decision process, or we can take the decision in efficient manner. And for that, my dear friends, the marginal profit and loss account is also important in nature. Then selling price is determined on the basis of marginal cost plus contribution. Now the question is, sir, what is contribution? So earlier I told about you that the contribution is nothing but your sales price minus variable cost. In order to find the effect of change in the volume of output, the break-even point, the break-even chart, and the other methods are used, which are the part of the marginal costing system. In order to find out the profitability of various department or a product, contribution available from the sales is compared. So it is ultimately the use of that marginal costing. Now let us move to the advantages of marginal costing. That is a cost per unit. The first advantage, that defining that the cost per unit. In a marginal costing, as a fixed overhead are not charged to the cost of production, the effect of change in output on the cost per unit is avoided in nature, and the marginal costing per unit remain unchanged irrespective of changes in the level of production. The next advantage, that is a no increase or decrease in recovery of overhead expenses. It eliminates the large balances left in overhead control accounts. When the fixed overhead are recovered on a certain basis, then the fixed overhead will be either the under recorded, or we can say the over recovered due to the change in the volume of output, and such problems would not arise in the marginal costing. So the question of recovered, or we can say the under or overvaluation of overhead, which is not measurable in the marginal costing technique. The next advantage, that is the decision of production in the period of prosperity. The marginal cost is a valuable aid to management in their task of decision making. In a time of prosperity, the firm would receive the order beyond the capacity of a firms to fulfill it. And the question before the management is accept only the most profitable order. The marginal costing helps the management in taking such decisions. The marginal costing helps to management to take the decisions also, to make the efficient decision which gives the perfect, we can say that the reward accordingly, and profit and loss maybe. So marginal costs are the various orders to can be the determined and compared with selling prices, and only those giving the largest contribution should be accepted. The next point, that is a useful in a depression. During the depression, price will have to be reduced in order to maintain the sales. The price have to reduce even the below the total cost. So far as the selling price is more than the marginal cost, it is the worthwhile to continue the production. The marginal costing thus indicate the level of price up to which the price can be reduced over it. So next advantage is that is a make or buy decision, or we can say the make or purchase decision in a different manner. Sometimes it becomes the necessary to decide whether a component or a part to be the manufactured in a factory or be bought from outside. If the price of a supplier is more than a marginal cost, it should not be purchased from the outside, even though it may be below the total cost per unit. For example, the variable cost of manufacturing a part of rupees 15. If the fixed cost is allotted to this part, supposed to come to rupees 5 per unit. So here the 15 rupees is what, my dear friends, that is variable cost, and 5 rupees is fixed cost. So the total cost is rupees 20 per unit. If the outside supplier is prepared to supply it at rupees 18 per unit, 18 is your total unit, my dear friends, then it seems to be the profitable to purchase it from him. However, this is a misleading. Suppose a part is not manufactured in a factory, even then the fixed cost is bound to occur. Hence, the cost of manufacturing of this part is only 15 per unit, not a 20. So here we charge only, my dear friends, variable cost only. So it is not worthwhile to purchase from the outside. So this is what, my dear friends, you have to take a decision with respect to your purchase area. So it helps, the marginal costing helps in make or buy decision also. The next point is that dumping in a foreign market. In order to capture the foreign market or to accept a special order at the reduced price, it is necessary to arrive at a marginal cost. If the fixed costs are fully recovered in a home market, that is your home country, it would be worthwhile to sell in the foreign market at a price below the total cost. And provided the price is more than a marginal cost and it does not affect the price in a home market. So this is what, my dear friends, ultimately changed that the dumping in a foreign market for it. The next is the relation between the volume and profit. The effect of a change in the level of output on the profitability is brought to light by the system of a marginal costing, calculation of break-even point, and preparing the break-even chart are useful in this regards. The next is useful in a system different cost analysis. The system of marginal costing is based on the difference between the fixed cost, or we can say the fixed expense, and variable expenses, or we can say the variable cost also. So this difference is useful in a system of flexible budgeting and differential cost analysis. The next advantage, that is the cost, or we can say the control over the cost. So here the cost is also important in nature, and the control over the cost. By dividing the total cost in two parts as a fixed cost and a variable cost, the control over cost become very easy. Fixed cost is the result of management policy, that is management decided what amount of salary should be paid to the manager. Thus management has a control over the fixed cost. So this is the what parameter, my dear friends, that told about that the control over the cost. While you splitting your total cost into the fixed and variable, then you have to justify that the which type of cost you have to control over it. So it is the ultimately, we can say that the taking the decision with the appropriation of mind and using some calculation with respect to the marginal costing, which you utilize that how to control over the particular cost. So this is also the one of the best advantage for the control over the cost, my dear friends. The next advantage, that is a easy to sales manager to fix the selling price. While you're determining the different type of cost, at that point of time the sales price is a very easy to evaluate it and to make the decision with respect to the selling price. It's a very easy in a manner. Why, my dear friends? Because you evaluate the marginal cost in an efficient manner. So if the cost of production per unit changes with the change in the output of each month, then it will be the difficult to the sales manager to fix the selling price. But by adopting the marginal costing, the marginal cost per unit remain the unchanged, and as a result of fixation of the selling price become very easy and flexible in nature. So this is what, my dear friend, the different types of advantages are over there for the marginal costing. After evaluating this, you have to evaluate yourself with respect to the three learning aspects. That is, you have to write the long questions, you have to write the short question, you have to solve the multiple choice question, and after that, if you want to refer something more, then you have to study or referring the different textbook and articles also. So in that, the first aspect, that is a long-term question or a long question, the first question is that describe the advantages of marginal costing, and second question is describe the characteristics of the marginal costing. So let us examine this particular in a particular manner, that you have to examine the what is marginal cost, then marginal costing, then the characteristics, and then the advantage of the marginal costing. In a short question aspect, define the marginal cost and define the marginal costing over there. Next is multiple choice question. The question number 1, that which of the following are the advantage is not correct in a marginal costing. The first option, that is a variable cost per unit, is same, not increase or decrease in the recovery of overhead expenses, it is absolutely right over it. Then the marginal costing is a valuable aid to management in their task of the decision making. Then selling price is determined on the basis of contribution only. No, my dear friends, the selling price is not determined only on the basis of contribution, because the formula of contribution is what, my dear friends? That is the selling price minus variable cost. So it is not only the aspect that only variable cost is measurable, or we can say the contributions is measurable. Here you have to define all that cost accordingly, and then after you have to evaluate your selling price by adopting the marginal costing. So the option number D is not correct in a marginal costing, advantages of marginal costing. Then question number 2, which of the following characteristics of marginal costing is not correct? So the cost ascertained on the basis of variable cost only, yes, it's absolutely right. Then the stock of finished goods and work in progress are valued on the basis of marginal cost only, yes, it's absolutely right. Then the cost is ascertained on the basis of variable cost and fixed cost. No, my dear friends, it is wrong. It is only and only created what on the basis of variable cost only. Then the selling price is determined on the basis of marginal cost plus contribution. Answer is no. So option number C is correct, that this is not a particular characteristics of the marginal costing over that. After the multiple solving this multiple choice question, you have to evaluate yourself and you have to refer more with respect to this particular unit. Then you may refer these two books over it. Hope you enjoy this study. Thank you very much, my dear friends. We will meet in the next session with respect to this marginal costing and continue with the limitations and the difference, or we can say the certain terms with respect to the marginal costing. Thank you very much.
स्वाध्यायः परमं तप